Good afternoon, everyone. Here we come to you, wrapping up the first week of the year 2022. Myself and Madavi here. And what a week of contrast it was. We started off with record highs, talk of Apple being the first $3 trillion company, and we close the week with all three major stock indices all posting losses for the week. The S&P, the Nasdaq, and the Dow Jones. And we now sit, I think the S&P and Nasdaq were down for 4 consecutive days. The Dow started off with a bang. It's been down for three. The S&P is now 3% from its record high. The Nasdaq a huge 8% from its record high. And when we look at the small caps, the Russell 2000 is 11% from its record high. If we look at the cause or the catalyst of it all, as we know, was the minutes that were published from the last Fed meeting. Pretty well much what came out 3 weeks ago. And if you recall back then, the market actually sold off on that, much as it did here, but it came back as they rammed the markets off up for bonuses at the end of the year. I'm being a little bit cynical, but when you see the reaction of basically the same thing like this, it's hard to not think that. So it was its worst week for the Nasdaq since February of last year. So we see Treasury, the US Treasury, the yields at the highest level since January of 2020. So we'll go through a quick overview of what happened. Any thoughts before we get going, Madavi?
No. Today was not a bad day. In the morning I traded the futures. In the afternoon I just did stocks. It got really choppy. Traded a little bit of the NQs, but that's it. We'll go over it whenever we get to that point.
Yep, super. Okay, so let's have a quick look at the big news. Of course, was the jobs report, which on the face of it, and again, so it's always important to look what the crowd's looking for. And before we got on air, Madavi and I had a good discussion about that because I'm of the opinion, like, how the heck didn't the market know what those minutes were? Same thing. He makes a very good point, and actually, I'll let you clarify it more of where the market is becoming so short or following.
Yeah. Well, basically, my thoughts are like, the market usually trades in the future, like 6 months to a year. But one thing has changed, like the rest of it. It looks like it's trading at the present because we're in like historical moments. So, like the Fed minutes came out, people probably didn't think Powell was going to be as dovish as he was or hawkish as he was. And that's what really changed the whole market, his tone of how he addressed it, because he's never done that in the post. He's talked tough prior to it, but he's never actually come out and on the minutes and said all the things that would be hawkish. So that's changed. And so the market, I think, is kind of trading at the present moment compared in the future because it's kind of unprecedented times. That's what it feels like to me it's going on. Not sure, but that's what the feeling I'm getting.
Yeah, it's a good points there. And from my point, I guess the jaded bit of me is like, well, how did they not know that, right? So, I mean, look, we're not complaining. It makes for good trading. But if you're an investor, it's probably like a little bit awkward and you're seeing extreme bulls become extreme bears in record time. We're like, and so that's where, we use Elliott and crowd mentality. So basically, they chose to ignore it when the herd ignores it. They follow it when the herd does. So don't put yourself, I guess the reason I'm bringing it up, don't put yourself in a position you just become part of that herd, part of that lambs to the slaughter. And it doesn't make it any easier. Now, importantly, Powell is going to be talking the week coming up, and so is Brainard, about his reappointment hearing is coming up before the Senate. Remember, Joe Biden has appointed wants him to be chairman again, and Lael Brainard will be the vice president. So it'll be interesting what comes out of that. So was he doing a test? Did he have to be tough on inflation as he goes up before that? That could have been one of the reasons. But it's not for us to work out what he's doing. Okay, back on the jobs. It was actually the lowest number of NFP jobs in the United States for 12 months in December. That's a pretty bearish report on the face of it. 199,000. What the market didn't like, as far as the bond market didn't like, was average earnings clocked up to 0.6%. We had a bit of rant about that yesterday, as that's not even matching inflation, right? So if we go through the numbers real quickly, but again, it's what the market picks up. So the unemployment rate is down to 3.9%, and we all know that that's not a real reflection of who's out of work. The participation rate was higher though, 61.9%, yet we had such a low number on NFP. So interesting there. Underemployment was down to 7.8%. The bullish thing though, or the bullish thing being bearish stock market, because we're talking bonds right now, bullish for the economy is now apparently bad for the stocks, right? So the net revision was 141,000 jobs higher. So that puts that lower number more in perspective. Manufacturing was only a gain of 26,000. The big miss was in privates, 211 from a previous 270, which is revised, and are expecting 365. Government payrolls were down, so another fall in government jobs. So the government's not giving people jobs. That's interesting. The long-term unemployed had a 2 million versus 2.2. Pre the paramedic, that was just 1.2. The employment population rate is 59.5. And here's the bit that the bond market didn't like. Hourly earnings for the month were 0.6%, up from 0.3 previous. Actually, that was revised up to 0.4, and that's what they were expecting. Yearly, that was 4.7, a big jump from 4.8. The expected 4.2, and the previous was 4.8. And people are working less with that. So 34.7 hours a week. Geez, mate, we have to get a job. We only have to do that a week, huh? Versus 34.8 a week. So all that's on the rest of it. If you want to look at the graphs and all that, that is on the website and go through it. Important thing is the market sees what it wants to see, not what we want to see. And that's why we use technicals, and that's why we look at order flow. I mean, that's very critical. And you want to adjust that as the day goes on. But overall, as you know, and we're going to go through them now, we have a look. We base our structure on our fundamental view and our technical view, right? So, and we use the Nova Wave and the math and cloud, and then we combine that with order flow, which, as you know, you've heard Madavi talk about that, watching that and how that reacts. Couple that with sentiment.
What was that again? Sorry, I didn't hear that part.
How you're very strong on watching order flow to go with the technicals, and if it's pushing through that point or holding that point, particularly on stocks, but also on futures.
Yeah. So I normally I look at the market. See, a lot of people like to look at charts, but to me, charts are delayed a little bit. So by me looking at being able to read the market makers, I get the most fastest accurate information. I take that as one of my clues, and I compare it to the charts and everything like that, and that gives me a kind of an idea where things are at. And I look at the flows, the volume of it, and the time of day. So those are kind of the things I look at, how the market makers are trading, what kind of style they're using, what kind of size they're showing. So these are things that you pick up over the years, and then you use your charts and all your indicators to help you adjust to it and see if you're kind of help you figure out the right direction everything's going.
Yeah, 100%. And actually, I'll take that a little bit further. I even take that to the point as I do a lot of options, and I actually bring up the market maker boxes on the options too to see what the market maker is doing, if there's orders in there. Um, because again, as what Madavi just said, you want to be as ahead of the game, trade what's in front of you as much as you can. And the technical analysis we use, rather than what you see elsewhere, is all about time and price. So mathematically, where it can be, um, so which is Gann, Murray Math, and then Ichimoku. And so I do find it quite funny when people bag on Gann and Elliott Wave, particularly. Generally, it's because they don't understand the concept of it, and it's the art rather than the science. So all you're trying to do with those is work out where it can go. And people are unpredictable, but they're predictable in that unpredictability. So that's why all that stuff works. Look at the tank, and we were long until that broke. Or long, when I say long, trade from a long side, we're trading from a short side since. And where we've lost on is pretty well if we buy the dip and hold it a bit too long kind of mentality. So you want a lot of things to line up. But time, and so remember, use the charts for what you can see is happening pictorially rather than what you hope to see, right? And not latent. I don't want to see wherever something breaks and then I'll get in. 80% of the time things fail, right? I want to be already in that situation and make that decision.
Let me give you a good example of it. Like today, I got in the NQs and it was moving so fast. I mean, you have to be a robot to be able to trade it. Then next thing I know, I'm out of basically 100 spooze points out of the money. And mate is like, hey, how did you get 100 points out of the money? I'm
Oh, that
like,
was
dude,
Q's, not Spoos.
no,
Yeah.
I know, NQs I'm talking about, NQs future. You know,
Oh,
it's like, how
yeah.
did you that's talent. I'm like, dude, this thing moves like lightning. You know what I'm saying? So if you look at it today, we're up 100, down
Oh,
230.
let me bring up the Q's. Yeah, yeah.
And I was like, mate, don't worry, this is gonna come right back. Just wait. But I was taking some heat, and it didn't feel very good. I didn't want to be in that position, but the thing just got away from me so fast, and it was like moving a
And
100
you're
point.
talking about this right here on the
And
5
then
minute.
so you got to be
Yeah.
careful. Even as much as I am, you can get those positions, but don't panic out. I didn't panic out, even though I was not looking at my P&L. I was looking at the trade and thinking where we're going to go next.
That's a good point, And earlier on, they tell you not to look at the P&L because it can affect you emotionally. Because you should already have your right size and your right limits. And this game is 85% mental. But yeah, because I trade the spoos basically, right? I dabble in the Russell and stuff. But there's a reason why I don't trade the NQs, and that's what he was just saying. So it's a running joke, basically. I'm like, how did you get out of that, knowing full well how far it can get away? You haven't let that go all day, have you, mate? That one comment. One comment.
Yeah, yeah, yeah. You got me good on that one, man. He was not a nice guy. He was kind of
Oh, come
very
on,
tough crowd today. Just put it that way. Tough
mate.
crowd.
So talking
What
about that
else did
is
I get that?
look at the Russell. I mean, so I've Russell from, if you want to look at a fundamental logical point of view, this thing should be shaping up for a buy, right? If you think. So, but we're making, and today I did puts and calls on this, basically straddle to see it from the long side, not selling vol. Which though selling vol would have been the right thing in hindsight today. But on a Friday morning, you tend to sell that more in the afternoon because you got the weekly roll, etc. Anyway, that just plowed down oil, but I can't. This is kind of a work in process because we're looking for a new vehicle to trade. So that just pounded down all day. Now, just think about that logically. And Madavi made that point. Is that so? Yesterday after the market, it was kind of nuts if you remember. With Donny, DWAC ripping up, then GME ripping up like 120, I think, to 170, up on old news, right? When we put all this stuff on Twitter and had a bit of fun with it, but on old news about NFTs, which we all know. I think most of us have a view on that. It's got to be proven, right? Anyway, it rips up, and we come in this morning, it's still up there. Then it just fell out of bed to 130. So if you take that back a bit, and AMC and others went up with it. Well, AMC's is the biggest guy in the 2000, right? So the biggest weighting. Anyway, it fell all the way back, which was a good indication that type of short squeeze mentality, the apes, etc., they call them, just isn't working. And the question is, when that's out of these indexes, or does it? I mean, that's what it needs to happen for those to bounce back. But noticeably, and we've said this over the week, they all run different stocks during the day. Because a lot of these guys don't trade futures or anything. They just pick out individual stocks. So, interesting thing on that. And Apple couldn't get over itself. It closed, I think, pretty well near the lows, didn't it? It bounced off a bit. So that was your other indications we said at the top of the podcast. Apple at $3 trillion, and we've now given back $10 from that. So that's a quality play right there. And yeah, here's GME. Let's look. So here's a good example of what I'm talking about on GME. And remember, Madavi, you traded this all with order flow yesterday. Pretty well bought here and sold here. He's not hanging around as some investment, right?
I think I told you it was the 150, 110 yesterday I got in.
Yeah,
and
150,
I got out
really
on 171, the highest point, 72.
Right, so which is up here. Now 174. Look how fast that fell. And then we come in today and it fell through the night to 148, rallies back to 163, and then just dogged it all day down to 132.
Well, that news came out. They finally confirmed it.
Yeah.
And once it got confirmed, they sold the news.
I mean, it's crazy that it went up that far, right? But again, that's watching order flow, watching momentum.
And this is a perfect example about selling the news and buying the rumor.
Oh, yeah. Actually, you could say Apple's that too, right? Yeah, but that's GME. We just wanted to get rid
of it. So remember, sell the news, buy rumors.
Yeah.
Because once the selling's out, people are looking for the next big thing. They sell it.
Yeah, I mean, it's really that it sounds, because you're in the hype of it, and if you're on things like social media and chat rooms, and everyone's, it's like being at a football game. Yeah, man, yeah, touchdown or whatever. So everyone gets in the hype, and you get off it. So you got to stay in the zone, even if you just take some off. But the reason we wanted to show that, was how classic that was, and that's something that it's not for the faint-hearted, and it's probably one to stay away from if you're not so equipped, right? That was quite a move. I mean,
that's a perfect example about selling the news and stuff like that. You could get.
I mean, and as we've been watching some of these what do you call it? In the new lows go by, there are all these tech stocks but mainly tech and biotech that are just being pumped by everyone, and they don't have earnings, or they were $5 a month, even quality like Qcom, Apple.
Here's another good example. Check out this DOGZ. 2 days ago, this thing was at like $9, and they murdered this thing, right? And when they murdered it, I was like, today I came in there and I bought a whole bunch and waiting for it to finally run. Now it's running after the market. So when things get murdered a lot, don't short it. Maybe you want to look at buying it, unless it's terrible news. That's another example.
Don't sell into the hole, basically. Let's see if we got that one to come up. Here we go. So this is dogs, I guess is what it is, right?
Yeah.
And so this is the news of Madavis. So this is looking at the week. And yeah, technicals ain't going to work on something like this, right? What they do show is, I guess, the one thing when it broke this line, Johnny Hindsight, as I said, is the greatest trader I've ever seen, right? But basically, it just dumps. So someone big was caught in it or selling. I really don't even know the news or anything about this.
It had news about some deal it did right after that news, and it ran up and it tanked. So there's another example of maybe sell the news, but they did it over hard on this.
Yeah. This went $9 down to, wow, is that right?
Yeah,
Two
250.
thirty, 225 or something.
Yeah,
And then
they
we've had
crushed.
this bounce. So this is where
That's where I started buying it.
now, another thing on this, avoid, particularly on stocks, catching a knife. The expression catching a knife means trying to catch this. Wait till you get a bottoming formation or hitting a level. So your Murray math and that'll work on this sort of thing, and your Chico, right? So that Chico gave you a buy here, but they're not. But because it's in action, and the whole way Murray and Ichimoku work, if you use it with those in combination with a few other, but basically it's telling you, look, hey man, this thing's oversold, but Madavi didn't start buying until he saw this sort of thing, like a bit more. What's the word I'm looking for? Consolidation, and then a pull back. This is where he's bought it, all in here. So that's a great trade, mate. And now you see it moving up after hours. So
Yeah.
hopefully that gives you an insight into what we
And
look for.
the reason during the market hours it would not move up, right? So I like, hey, this is going to move up after the market because after the market there's less volume, less people, a lot easier to move stocks up. That's why you see a lot of these companies ripping after the market.
Right, right.
During the market, there's too many stuff in the way, market makers, whatever, shorters. After the market, they can just rip these things.
Yeah, and they get an axe, as they say, so someone who can control it. And the big thing when it shuts, a lot of people aren't allowed to trade once it shuts, right? So something like that, some people might have been caught and might have been trying to sell out of it all week. Um, so yeah, so that was, and we talked about the yields, didn't we? So they're back at above the May high on the 10-year, but they did come back. What's going to be interesting if the stock market does grab some feet down here and rally. So there's an old saying: the rubber in commodities, the rubber always meets the road because commodities is more real, right? You eat corn, or actually use corn for ethanol, I guess. Not a good example. You drink coffee. There we go. And oil is real for all the multiple uses. It's not just gasoline. Obviously, it's making the cracks, gasoline, plastics, blah, blah, blah. So at some point, the price becomes real. So that's rubber meets the road. But in what markets also need to do, and we have that with all those stocks overdone, doesn't mean it's finished. But if it does grab traction with, what's the word that you say when the natural buyer keeps coming in to buy the SPY and QQQ? What's the word for that?
Um,
Passive, right? Passive. See all that passive buying always there as long as people have jobs. And that's the main reason that Powell and his boys and girls are so big on jobs. They know if people don't, if they, as long as they have their jobs, they still keep having to 401k. We saw the consumer debt numbers come out, and let me just read them to you. They were massive numbers. It just came out. Let me find the release. So that's what's critical to all them. They don't want the stock market to fall or collapse. They want it to be realistic. Because of those factors, when Bernanke was in, remember the student of the recession and all that, he was big on consumer confidence being the consumer sentiment, consumer confidence, and therefore business sentiment being the main driver of things. And that said, but then we have his hearing this week, so he's got to, dang it. So he has to look tough. And I actually think a lot of what Powell's doing is pretty smart in that, okay, we missed it. He probably still thinks it's transient in the sense that it's all because of supply and demand, which is fair. We saw in the trade number this week, it was massive, record, almost, what do you call it, imports. And we know they're all buying probably Christmas presents. I don't know, but let me But this number is a massive number that came out. Consumer credit was 39.9 billion in November versus just 19 billion expected. So double what's expected. And of that, revolving was 19 billion and non-revolving 20. So there's no shortage of demand for credit, which is interesting when you see politicians of all persuasions play different games, But so that all that's out there, and he's now got to deal, and he's dealing with, how do I say this nicely, a bunch of Congress and senators that aren't the sharpest knives in the drawer, right? And most of them are just career politicians. And anyway, we don't want to go down that bloody path, do we?
You got the guy who would be working at McDonald's otherwise.
Right, on a good day. Don't knock
Yeah.
the person at McDonald's, mate. That's not cool. But so that all that stuff's in the background there, and then as far as oil goes, he knows, this is a bloke that was from Carlisle, and he knows how the energy markets work. He also is discovering how politics work and how that's really made a mess of energy, and also how they really don't care. They don't really care. That's very clear.
Serving their masters most of the time.
Yeah, they're certainly not serving the people, which is really, really not a good situation. And now here we are. We got this, what do they call it, cyclone bomb hitting the northeast. Look, it's cold down here. Where Madavi is in California. I live in Texas. We like the warmth, right? And we're like, damn, we got to turn the heater up. So I can only imagine what it's like up there. If you trade natural gas, you know how that point is through the roof up there, right? Henry Hub, as I've said many times, is the Houston, Sabine, that zone. Different, very big on LNG, but it's not for that cold. As a general rule, we do get our cold spells, as we know last year. But anyway, the point is, all this, the man in the street's well aware of what's going on. And our friend Roman was on for a chat earlier, and he's in Eastern Europe. Just how high costs are over there for natural gas. I mean, and all that, right? These things are real, and so the misconception is with stock markets and bond markets, just the rich, the 1% getting richer and richer. Well, it's also about keeping the whole thing afloat, of kicking that eternal can down the road. There's all these factors you want to take in. And then the geopolitical situations, and they do a very good job of misdirecting, right, of what's going on in the world. So we'll go on what's coming next week with more on that, but let's look at oil real quick as we talk about geopolitical. So oil daily, as we opened up.
About politics, one second, they're always trying to deflect what they don't want you to see. So all the stuff you hear on news is the things they want you to see, but the stuff they don't want you to see, and you're not hearing about. So there's always deflection going on.
Oh, 100%. It's kind of like when I remember when with my sons, we went to this Montessori education. Was called positive discipline, and it was all of that, but it's redirection, which is exactly it. So they basically treat us like children, and it's worked. They've divided the world, partisan, blah, 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 scared the world, fear bombs. But they really don't want you to see. There's an old saying, follow the money, yes, but even that can give you false positives. I just had to use that term. But seriously, I mean, they definitely that, and we've seen that. We talked about it with what's going on in oil. So in oil, they don't want us to see that they've really stuffed up the policies, right? And actually, Ryan Sutton, I saw a comment he made today about how there's a collective now lending money to the producers to get production going, because banks basically can't. Most of the banks won't because of the whole fossil fuel thing. And then a lot of private equities won't. And it's just madness. You transition, you got to do it with a plan and collective. And you got to worry. Like Madav made a very good point. Instead of working for the master, you work for the people, but the sane people, the rational, just, the guys who pay your taxes, pay your wages, all of a sudden, you know, it's all there, but people are aware of it. So you got all this bubbling underneath. It's an interesting game, and we could talk all day about it. But the point is, try and see through the maze, I guess. And the charts are a great way to do it. Anyway, on oil, we talked about today. It actually hit our exact high on that, or a little bit more, but on the plus and 2/8, which will go on the short term. But look where it closed at, right at the 50. And the S&P closed right at the 52. So these are balanced markets. Now, why did that pull back? This went up because of Kazakhstan added a lot of this. And then we talked about how this whole redirection about Ukraine and Russia, right, to redirect what's happening domestically here. Maybe I'm cynical, but that's how it looks to me from what I've seen over the years. Russia went into Kazakhstan, sent their paratroopers yesterday to quell it. It's pretty bad there. There's talk of, police getting their heads chopped off and all this sort of stuff. End of the day, what the West talks about, Chevron's there. Worried about Russia, same thing, oil and gas. It helps to have oil and gas if you're in trouble, I guess. Bottom line is, 7 or 8 hours later, Russia just says, oh, yeah, we'll look at pulling troops off the border of Ukraine, or something like that. So then that's why oil fell. That combined with risk assets coming up.
Yeah, Russia also don't want the U.S. send their buddies, the Muslim
100%. And I don't think. And here's the interesting thing: Chevron is from here, right? And I'm pretty sure they don't want them in there either. They seem to be doing all right, and a lot of U.S. and Western oil companies basically have their own militias now and stuff like that. But they don't want it messed up by. I'll put it another way. I'm a U.S. major oil company. The governing bodies of the country I have basically have. It's pretty. Would I be out of school as saying the current energy secretary and the current president don't have a lot of understanding of energy and the transition and how it works and the geopolitics of it? Would I be out of school in saying that, Madavi? I don't think so, right? So if I'm them, I kind of want, okay, I don't want this situation that may be controlled for right or wrong to be messed up even more. That's a pretty bad indictment on the situation. Anyway, moving on. Here's what we saw in oil on the hourly. Remember, overbought, double top. Remember, it failed. Just real classic things to look for trading. And we just worked our way down once we broke the Cajun, then the tanker. They had not much support there. This was news related. And then we came down and we stopped at the cloud. You can see how that worked, right? So look more at this, the patterns, than just the straight out lines, right? The lines may trigger things, but look. The reason we use this. Sorry, mate. Go ahead. Were you about to say something? Okay, and so just lastly on oil, here's that plus 2/8 we talked about, and there was that minuscule fake test, but the plus 2/8. It also was a double top. You had your classic 1, 2, right? A, B, 1, 2. Look for those things, they repeat. Machines pick them up. Seasons traders pick them up. What was the other? Oh, oil. Natural gas. So natural gas managed to work its way up towards $4. They didn't quite get there, but the Cajun, a lot to do with that is the northeast weather, right? And what's the other one? Oh, yeah. And so I wanted to just show this, and I think I may have tweeted this, but we finally broke out of that little range on natural gas. So we got that little pump. But look at this, triple top, all this resistance, right? It is domestic. New York basis is not Henry Hub. So, okay, I think that's all our energy. So let's get back to the stock markets, what we got next week. You're coming through really slow all of a sudden there. So let's look what we got next week, mate. You ready? Okay. So next week, like I said, we have Powell and Bernard as our coming out next week. The other big thing and timely is CPI. So guess what we're going to be talking about next week, right? Is inflation, right? So let's quickly go what we got next week. So we have the 10-year went as high as 180 this week, today actually. Then it settled down a bit, but it was still up there. Then we had, so that we have that in the setting. Okay, sorry, Madavi's just on another line real quick there. And then we have, so we got wholesale trade on Monday. The big deal is Jerome Powell, and they're going to be before the Senate committee. That's Banking, Housing and Urban Affairs. Sorry, I was just looking to what it was. We also have 4 o'clock on Tuesday, our resident hawk, which is James Bullard. He'll be talking. And we also have, so that's after the market. It looks like that's 4 p.m. On Wednesday, we have the beige book out, which is going to be interesting. That's going to be telling us a first look, really, of how the economy is doing with Omicron. We have the federal budget out at the same time. That's probably going to be a horror story, no doubt. And we have CPI out on Wednesday. So that's all coming out the day after Powell. So let's look if we got other Fed guys talking. So on Thursday, we have Brainard is up on Thursday before the Senate. So remember Powell on Tuesday. Then we have, here's what I'm looking for. So on Thursday, we have Barkin talking, the Richmond Fed, and we have Evans talking, Chicago Fed. So usually what happens if it gets out of hand, just say the market, either way too much. Remember, bond market and stock market. These guys will say something. Number-wise, we have CPI on Wednesday, and PPI on Thursday, and then Friday more industrial production, consumer sentiment, and we finish up with New York Fed Williams talking. So it's a pretty active week there. We do start to get earnings next week. So next Friday is all the big banks. JP Morgan, Citibank, Wells Fargo, and BlackRock I have out as Friday. Usually you have PNC and Wells Fargo and Bank of America the day after, so either they're not on the list here or they're on Monday. But the end of the story is you got the banks reporting on Friday. Wonder Watch is on Thursday. You got Taiwan Semi. That's the biggest founder in the world by a long shot. There was also a report out today that Taiwan is looking to increase prices for shipping. So obviously you've all seen the shipping indexes, they're taking a bath on that, and it's as much as 20%. So these factors are all happening. On Wednesday, we have KB Homes reporting and Info Systems. There's a few others there, but KB Homes will be one to look at with interest. So again, I think we're all pretty much on what we think's going on in the bond market, and it's a little bit more than just black and white inflation. There's a lot of all these other part of the game, right? You've got satisfying. Everyone says the market. Well, I don't think it's all that. It's about the market where it doesn't cause damage to the sentiment of the consumer, sentiment to business. It's not whether Freddie over at Goldman Sachs or day trader over at somewhere is happy, right? There's more to it than that. So that's pretty well everything from me. Hang on one sec. I'll just see if Madavi's
Right here.
available again. Oh, you're back there?
Yeah. I'm right here. I'm right here. If you need me for anything, let me know.
Yep. So I was just going through kind of the view of the games I have of the Fed where they're being renominated next week is Jerome Powell, Brainard up to vice president, and then you've got all these other things of trying to keep the ship afloat. Could you just put yourself in these guys' shoes right now? Remember that the Federal Reserve is not a government. It's one of the few nations where it's a private agency. Yes, all these people, for one, it's not exactly the word I want to use, but it's not owned by the people, like say Bank of England, RBA, people like that. So that it doesn't entirely act for the people, but it's changing where it's become more like that. And then you've got a U.S. administration and a U.S. opposition that if you're looking from the outside, I can't tell you on air the comments I get from people not from around here. So he's got a minefield through that. It can't be easy, right? He's got to second guess this, and he knows he's the one to blame because that's who everyone wants to blame, right? So. Anyway, that's just my thoughts on all that. I think we covered everything that's out next week, right? Anything further to add, Madavi?
Well, next week is going to be really interesting. Are we going to hold up at all, or this is just going to be a complete slide down? I think this is just the bloodbath about to get going. You got to remember, you take a whole year, right? And let's say the market's down 10, 15%. You could take 5 days out of the whole year, and probably 80%, 70% of that selling has been done in those 5, 6, 7 days. So it's really important that you maximize your gains for those days. You miss those days, it's hard to make up.
Oh, right, exactly. If you're long the wrong way, or if you just don't move the short if you miss the short as a trader. And I think that's critical this week. Are we around? So keep it simple. Look at your 50 on your daily chart. Let's bring that back up again. I mean, have a roadmap of where this stuff can go, right? Now, so where's the most pain? Everyone seems to be bearish now. Does it have one more, as they used to say in the day, I don't know in this world of political correct anyone can say it, but they used to call it an FU rally, right? Does that happen and give you a perfect head and shoulders? Are we just testing all this to go up? I mean, that's why we use charts. What we do know is there's a lot of events this week that could sway it either way, right? Inflation numbers, Powell himself talking, other Fed people. What was the other big one? Oh, and then you got all those bank earnings on Friday. I'm assuming they made beaucoup money, and they're probably, here's what's going to most likely happen. They're going to guide higher because of interest rates. Have you noticed all the banks that hit 52-week highs today? So that's the other thing with this market. It's a two-speed market. And we made the point last week that we've had separate markets or separate bubbles or balloons, however you want to call them, for a number of times. And a lot of them, they've been popped. The obvious one's tech, right? But you can go on like that. Let me see if there's anything moving in the aftermarket here. So big week to watch. Be open-minded. And the thing is, volatility is still very cheap if you want optionality. What did it close at? Let me look. 1876. That was off 85%. So that's the other thing, as Madavi mentioned earlier. It looked like here's the weird thing. Everyone says they're bloody bearish, right? We've had people in here today, bearish. People on, but then you look at the typical fear indexes like VIX or things like that. There doesn't seem to be the fear, and other things we're 52 hitting 52-week highs. So if when there's fear, they don't want to own stocks. They don't cycle into something else. So we got all these. It's not an easy market right now if you want to do that. So what I do when it's like this, I pick a few instruments. I know them well. I follow them. I know when I'm wrong, when I'm right. In these situations, I'll also trade my strategy a little bit, buy puts and calls, knowing that I'm probably going to lose on some of them, right? But I'm going to try to control myself. Well, I'm going to lose. It's not probably, you're going to, right? But you're trying to feel where the market is, and you'll pick it up through that. You've got to actually have the position to feel it, right? But yeah, so big week for all that. We will do our weekly report. We'll go through all the weeklies. We had a quick look at the basics here of S&P, oil, natural gas, and the other stock market indexes. But we go through all the different currencies, commodities. Remember, it's all related. So know your macro, know your geopolitics. They all influence each other. Let's finish up. And unfortunately, our friend Meta John has been a bit under weather, but he's doing pretty good.
I got you covered, buddy.
You got me covered. So,
Yeah.
I mean, am I out of school in saying that you kick little Omnicrom's butt?
No, I think I succeeded. Having it twice now. But
you're our veteran. You're our guinea
yeah.
pig. You're our you're our Wuhan lab.
Yeah. Wuhan, Johnny.
Exactly. Well, let's go with that, huh?
I just want to keep it short and sweet. You know, Bitcoin and the rest of the crypto market has been taking it pretty hard. Everything is down. And one of the interesting things that, you know, there's a lot of reasons why people say fear, profit taking, early cycle, blah, 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 blah. What's funny, and I always kind of think about the hodlers and the people who have a lot of holdings, like have a lot of Bitcoins, like the billionaires, you know, like Elon Musk, you know.
Oh, well, you mean our
the list.
Yeah.
All of our drinking buddies. What was funny is I was reading this article and it was about exchange Binance. So Binance had this weekend or this week somebody come in and buy, I think it was 43,000 Bitcoin. So one wallet that they have on their exchange.
Right.
Came in and bought 1,000 Bitcoin. So does that make sense?
Sort of, but I'm not, so I know there's 5 or 6 big whales. We all know that. I mean, I'm not sure how it's interesting. I think that's more that they obviously sell and rotate some of it, but I think at times they just don't support it. You know what I mean? And then,
yeah.
And so they're accumulating it.
There's a theory that it's kind of like the people that are going to have majority control because they were the long-term believers, hodlers,
right?
Owning the store value will be the ones who will have the, financial stability moving forward, while the rest of us, that didn't get in on that, they have to play like today's tech, superstars like Bezos and.
So when did Musk actually start getting into Bitcoin? Because he's not one of those whales. When did he start?
You know what? I pulled up something because I know we had that conversation, and what it was who holds the most BTC, and when I looked up who has the highest or who has the most BTC, there was about 10 people, I believe it is. It was started by this Satoshi Nakamoto, who nobody knows about, and he took 1.1 million out of the entire equation. But the world's top 5 millionaires, billionaires, whatever they are, it shows here that it's Barry Siebert, Brian Armstrong, Michael Sayer, Sam Bankman, Elon Musk. So there's just quite a few billionaires that
Right. So there's a
do
lot
own
of, but
quite a
Musk. I just mean so Musk wasn't in that first five, the famous five, whatever they call. But aren't the what about the Winkle brothers, the Winklevoss? Am I saying that right? Winklevoss.
Tyler and Cameron Winklevoss.
Yeah. So they've got to be one of the biggest too, don't they? They own that exchange, right?
Gemini, right?
Yeah.
And that's the whole thing. What I think, why did Zuckerberg go? Still, what they were trying to do, the Harvard Connect. You know, the Harvard Connect was that first Facebook version that Mark went out and took as his own.
Right.
And then they settled out of court years later for a very small amount compared to what it's worth. But they took that money and they put it into Bitcoin and they parlayed that into Gemini.
Pretty impressive.
They've done a lot of stuff.
I mean, that's some good parlaying. It never works for me, that sort of thing.
Well, the thing is at the end of the day, I think they're going to end up beating, so to speak, Mark Zuckerberg's own little trail, the way that they'll have more credibility and influence on the market with the NFTs that they're getting involved with and the projects and that exchange, everything that Zuckerberg wants to do. He kind of
they're already doing it, right?
Well, he's trying to do a lot of that stuff, but I think he's got himself in the foot in a lot of these different, people getting to trust him moving forward. There's a lot of people that don't. So that's it for Bitcoin and crypto. Yeah. I don't know. There was a bunch of stuff. If you go online and look at this, it's kind of funny about the 10,000 people that are majority owners. And now, I believe in the last year, there's been more people investing in Bitcoin than ever. So, for wallet holders, every year seems to get more popular. Millennials are big on it. So, just have to be mindful of that's kind of what they like and how they want to use and actually be able to transfer money to one another. Yeah, that's my take on it.
So the key now, though, is it has come off, just like the NASDAQ, off very aggressively, the price. So if these guys aren't, whether they want to stay in or out of the market's a moot point because they probably don't need to buy anymore. It's more those that are in the market with the fast money, however you want to put it, whether they need to sell or buy. So that's the interesting thing, I think, with crypto, how it's evolving. I think things that have nothing, like the Doge or the Shibu, is it Shibu? I mean, let's be realistic with a lot of these.
43,000 Bitcoin is 5.5 billion. Somebody step on Tuesday.
Yeah, there's some big positions, right?
Well, he's now got a pretty big position. That's a big buy. It's got a lot of money.
Yeah. So which it's
interesting. The prices are down, and the guys are buying stuff like that.
Right, or it could be transferring. You don't know what's going on. Really. I mean, those sort of transactions happen every day in currencies and bonds. So, but it does show you the depth of the market. That's for sure. Well, I don't want to hold you too much. I know it's harder for you to talk. Anything else?
That's it. Had a good day. I shorted the queues and got into a couple positions first to stop.
Yeah, you did a great little trade on the hour. You're the man of the hour.
I'm still in it, actually.
Well, to put it in perspective, this time yesterday morning, we can say it now, you kind of sound like death warmed up. So you recovered well. So for those out there listening,
talk.
Omnicrom is real, and you can see you recover from it. So it's not everyone's case, but he's a living, breathing example, right? So to the point you've had to have a name change.
And did you get boosted?
Just
He got boosted, all right, by that tequila. Anyway, let's not digress. Anyway, guys, thanks everyone for sharing, and those that we've had a few nice comments back. Slowly but surely, more people seem to be enjoying and listening to our little world we live in. So keep sharing and following, like it, and join in the conversation. That's what we're here for. Everyone have a great weekend. Enjoy your family. If you're in the parts of the world that are freezing cold, stay warm. Don't go to sleep if you've got a gas oven. Is that the story? Or a gas fire? Whatever it is. Anyway, all jokes aside, enjoy your family, enjoy your time. Stay warm. We will get out our weekly report over the weekend at some point. Thanks, everyone. Bye now.